Okay guys, welcome to this section. So on this section we are going to be looking at the concept of order blocks. So what is an order block or a sponsor candle, as the case may be? This lesson is going to be very brief, just this concept of order blocks. So an order block is an institutional candle where bank level traders have established either their buy or sell positions, and upon retracing back to that particular level we expect a sharp movement from that particular price, specific price level. So a bullish order block is the last down close candle that was responsible for a rally hop to the upside. So the last down close candle that broke structure to the upside is the bullish order block, while the bearish order block is the last up close candle. Remember, the bullish order block is the last down close candle that was responsible uh, for a continuation higher, while a bearish order block is the last up close candle uh, that was responsible for a continuation lower. So that's an order block. I'm still gonna show us in chat. So then we want to be trading under rules atmosphere, under a rule based system. So we don't just pick order blocks randomly hoping that price will react to those OBs. Of course, you must understand that order blocks, they act more or less as support and resistance. So this is our own advanced support and resistance, not just double tops, double bottoms. No, not just all those things, but specific price levels where bank level traders have established their previous positions. So that's what we want to be taking as our support and resistance. So a high probability order block is one that rates liquidity either to the downside or to the upside, as the case may be. Then that's the first characteristics you want to see or feature that you want to see in a high probability sponsor candle. So the one that is high probability is the one that first rates liquidity, that is, it rates a previous low, it rates a previous high. Then apart from that, secondly, that OB must break structure high or low. It must break. Of course, you understand that when we are in an uptrend, price will be making higher highs, higher lows, higher highs, higher lows. So a bearish OB that is high probability, number one, will first raid liquidity. It will first raid the last higher high created, then it will fall down and break the last higher low. It will break that structural low. So that is a high probability bearish OB. So it must break structure high or low. That's the second characteristic of a high probability OB that is unlikely to fail. Then, like I said, it is the last up or down close candle responsible for breaking market structure. I hope we are getting this. This is very important. So then the order block or sponsor candle must be a fully body candle close with relatively small wicks, not just a weak candle. We want to see a fully body close candle. That's high probability. So if those criteria above is not met, that sponsor candle or order block is not high probability and is likely to fail. So this is the checklist I use to determine my order blocks or sponsor candles. So 2 or 3 of these features is enough to give you a high probability order block, but when you have 4 of them, yeah, that's a wholesome hobby that you should expect price to react away from. Of course, you must understand that we don't just trade order blocks. You want to know what is the institutional order flow, what trend are we in. And like I discussed in the last class, you can determine or know the trend by understanding market structure. So are we constantly making higher highs and higher lows, or are we constantly making lower lows and lower highs? So you can easily determine the directional bias like that. Of course, just right now I'm still gonna show us how to know order flow just by using OBs, order blocks. So apart from understanding market structure to determine bias or trend, you can also uh, utilize hobbies or sponsor candles to know the directional bias. Of course, this must be from higher time frame uh, uh, perspective. So higher time frame order blocks are the ones that are highly or mostly uh, probable to win. What do I mean by this? You want to be marking out your levels from higher time frame. So that is when you can now refine it to the lower time frame to get sniper entries. So this is what is still going to be included in this section. I'm going to show us briefly how you can refine your OBs, in fact, to the 1 minute chart. So starting from the higher time frame, refining your OBs to lower time frame to get sniper point entries. Okay. Okay, guys, welcome. Yeah, this is I want to show us a scenario of a bearish, high probability bearish OB. So like I said, number one, the first criterion we want to see is that uh, you must understand that we want to be in a bearish momentum, a bearish trend. So uh, the first characteristics I said here is that that whole B must read liquidity. It must read stops. So, and that was what actually happened here. This OB, the last up close candle that was responsible for this downward push to the downside, read liquidity here. So that first characteristic is achieved. Then secondly, that OB must break structure high or low. This was the last low the price created here, and that OB broke that structure to the downside. Second characteristics met. Then that OB is a fully body closed candle. Third characteristics is met. Okay, so okay, like I said, it broke structural low here, then it broke market structure here. So this OB now has the full characteristics of a sponsor candle, and that is why you see it is high probability. You see that OB price rejected off it just nicely, just nicely. So upon this happening, we expect price to come back into that OB, then we can sell off reasonably, take some sell positions around this zone. Some people can just set their limit orders uh, at the body of the hobby, or the 50% of the hobby, that is the equilibrium. Or in the case of, if that OB has a wick here, some people put it at the wick, some people at the body of the candle, and some people 50% equilibrium of that OB. That is the mean threshold. The 50% equilibrium of that OB is what we call the mean threshold of that OB. So if you, let's say for instance, you will not be on chart, you just want to look at your chart and take risks, you can just put your limit at the 50% of that OB, and you put your stop loss just above the hobby here. So your stop loss will have just been here. uh, that's reasonable. This is H4 time frame, that's reasonable 55 pip stop loss. That's why I said if uh, you were on chart, for you not to take, because sometimes price may just continue pushing higher, but we know, understand, this is high probability order block. So you mark out this particular level, then you wait for price to come to this zone on your lower time frame. Exactly. So you wait for price to come to this zone, and you can in fact switch to the 5 minute time frame, and you refine your entry, and you want to see this particular scenario inside this zone on the 5 minute time frame, or even the 1 minute time frame. Okay, so that's it on bearish order block. Okay, let's see a bullish OB. Okay, yeah, okay. Okay, this is the opposite of the bearish OB. So this is a bullish scenario. So this particular OB rate rate rated liquidity in this area, okay, then broke structure to the upside, then is a full body close candle. You imagine we have this bearish candle here, we have this one, uh uh we have also this. Now you imagine which down close candle should I consider. Now in this scenario you want to take the last down close candle. You want to take the last down close candle that engulf the others. Now this is the real OB. Of course you can take your trades from here or consider 50% of this particular OB. So price came nicely back into that OB. You see that? And look at the massive rejection of that zone. So this is what we want to be seeing in high probabilities OB. Okay, okay. So uh, that being said, let me show us. So what I want you to do now is that to go to your chart. Okay, so go to your chart, identify bullish OBs and bearish OBs sent to me in my inbox. Identify bullish OBs and bearish OB that fulfill all these particular uh, uh, scenarios. So then, like I also said earlier on, that we can determine order flow using using order blocks. So when we saw this particular price structure here, okay, we saw this expansion move in price return to that OB. Price returned to this OB, then rallied up, came back into that proportion block, then rallied higher. Then we see price coming back to this OB left here as well, then rallied up. So in these scenarios now, we expect price to be respecting previous OBs, bullish OB it created to the upside. Upon we seeing a break to the downside, that's when we can begin to anticipate that okay, we think market structure is about to change. So we see price making bullish Bs as we are expanding to the upside. We see price uh, creating bullish OBs. You do not expect a break of this OB to the downside. You do not expect candles to close upon candles closing below these particular levels. That's when we'll have a breaker block. So we're still gonna discuss the concept of a breaker block. So upon price closing below this particular price level, okay, okay, like I think I've said it, you must understand that an order block uh We want another block is not just the body of the candle alone. The wick is also important because price can react from majorly three areas from the order block: the wick of that order block, the body of that other block, this is the open of the body of that other block, then 50% equilibrium, which we call the mean threshold of that other block. Those are the three zones or levels we expect reaction from. When price drops below the 50%, then you should be alert that something else wants to happen. We do not expect a break below the 50% mean threshold. I mean the mean threshold of that OB. Upon break below the 50%, then you should be anticipating the opposite. Okay, so we do not expect a price to break these OBs to the downside. So upon price breaking this OB here, this candle, we now call it a breaker. We call it a breaker block. We call this candle, this particular down close candle here, the price broke through to the downside. We do not expect that because we are in a bullish scenario. So upon price breaking into the downside, that's what we call a breaker. And you see, look at the price reaction from that zone. You will have caught a reasonable amount of it. This is the daily time frame. Okay, so look at from that zone. Let's say you, okay, that's a reasonable 400 point, almost 500 pips rather. Okay, so just from a breaker concept. So when we are in a bullish scenario, we do not expect price to break bullish OB. So upon price breaking the last bullish order block, that's what we call a breaker block. That block becomes a breaker block. Okay, I mentioned something earlier here. I think I need to compress all these things such that okay, when price broke structure here, return to this OB, rallied higher. Okay, when price rallied higher like that, the last down close candle that rejected off the other block is what we call the proportion block. Okay, that's what we call. We expect a sharp reaction of that proportion block. So let's assume you miss this OB trade. Upon price rallying higher, this down close candle is now this one rather is now the proportion block. You see, as price rallied higher, came back to that proportion block, it continued to the upside. Okay, so that one can also give you high probability trades, but most of the time the one I don't really pay attention to proportion blocks. In fact, I rarely pay attention to breakers unless I see a confluence of breakers and OB, because sometimes you can have the confluence of breakers and OB together. That's high probability. Do we understand that? So whenever you see breakers correlating with OBs, wow, that's perfect. That's 100%. Let me show us an instance in synthetic indices just now. Okay, where is that? Okay, wow, this is awesome. Okay, I expected I'd anticipated a reaction prior to this move here. I expected a reaction from this daily order block. You see how price rejected nicely off that daily OB. Okay, price rejected off it nicely, and you could see that OB there rated liquidity. Which liquidity did that OB rate? Look at this swing high here. So this OB rated that liquidity, then broke structure to the downside, then is a it's considerable a good body candle close. It doesn't have much amount of wicks like that. And prior to that one, you could see that this OB here rated liquidity, broke structure, price came into it nicely, boom, and broke a rally to the downside. So the same scenario here, price came back to that OB here. I expected a rejection of that OB, and that was what actually happened. I did not take that trade. Why? Because the stop loss would have been too massive. Okay, so upon that happening, Upon that rejection which I anticipated, then I come back to the lower time frames. And what is it I'm looking for? Okay, this is what I'm looking for. Now this is what I expect for this price to do. Okay, I expect this is stop hunt, this OB rated liquidity, then boom, broke structure to the downside. But you see, as price was coming down, price created another bearish OB, created another bearish OB. So which one do I pick out of all these ones? Okay, I saw, look at this bullish OB here, this bullish OB here. You see, we call it this bullish OB here that rated liquidity to the upside. Price broke it down, so that's a bearish, that's a breaker there. Okay, so this breaker now is now inside this OB. So what I expect, I do not really anticipate for price to come back to this bearish OB again because of the scenario it gave here. So this is a good PDRA, a breaker plus an OB. So I expect price to come into that zone, then reject off and sell. Okay, does that get clearer? So when you have the confluence of breakers and OB, that's high probability. So I expected price, even though price did not really, is still gonna come there. I want to see maybe it want to restrict to give us a buy. So that's why you can actually, I wanted to buy. Okay, I think I needed to clarify something here. I saw this particular trade yesterday night. Okay, so I'd expected price to return. Of course, I told you price is very fractal. Price is very, very fractal. Okay, okay, I actually was watching this on the 1 minute time frame because I expected higher prices. Okay, okay, that is that, this is that zone here. Okay, now like I discussed in market structure, when price was slashing down, price created uh a lower high here, created a lower low, stop on. You see that break in market structure. If you're very aggressive, you can take this one structural break in structure and you go long from here. You see price return to that whole B that raided liquidity, that broke structure. You see the confluence, all these things coming together. This OB raided liquidity, broke structure. You see it's a full body close candle. Price came back into it, then boom, rally to the upside. Do you see that precision? Now I did not take this because I know this is 1 minute. Price may just continue to the downside, you know. So I wanted to structure a break before I actually take this trade. So I know if they are willing to go to the upside, they will still break structure the second time. So they broke structure. Wow, that was the signal I gave. If you were part of this academy before, uh, uh, I recorded this video, you know that I gave the signal on VIX 100 before this recording. Okay, so this was actually the level I expected price to come into before the rally to the upside. So I gave the signal here, even though I put mine here. Okay, so I expected price to come to this OB here, or this 5 minute OB. This 1 minute OB is inside that 5 minute OB. So I expected price to come here. My stop loss was just below this zone. Okay, I expected price to return before continuing to the upside. But lo and behold, price broke this zone here. This is actually a 5 minute bearish OB. Okay, okay, you see that, that's a bearish OB. That price broke to it, became what, a breaker. So price came back into that breaker. I did not expect price to react of this breaker. I expect it to come back to this OB here, you know, before continuing to the upside like that. So as price, I identified that OB, but I didn't want to take it, you know. I don't really love taking breakers like that. But how do you capitalize on breakers? So as immediately price came to that OB and I saw a rejection, you see this bullish candle here, you see that massive rejection to the upside. Okay, price actually gave a price action you can trade. Okay, so price created a low, okay, created a high, failed to create a lower low, failure swing, you know, broke structure to the upside inside that breaker, 5 minute breaker, broke structure to the upside. You see that break in market structure here. Then price came back to that OB, boom, that was it. Boom, to the upside. You see your stop loss here, you'll have caught, you know, some dollars, just using, I think this is just on the lowest loss size on this VIX 100, it would have just been $1 stop loss, and you'll be targeting nothing less than 38 or to 40 pips. Just imagine if your risk is $1 and you are targeting 38 pips, you can afford to open 10 positions based on your account size, 5 positions, and you just targeting 40 pips. That's 10 times 40, $400, and this is within a day period. Okay, this is how precise it can be. Okay, so this is a breaker trade. I want to give you a scenario where you can take breaker trades. Okay, so if you are not sure whether price will react off that breaker block or it's gonna come back to the source OB, you can just wait for price to come to that breaker, and you go to lower time frame and see, and you check or watch out for the trade scenarios you want to see. What do you want to see? A failure swing or a stop hunt, a break in market structure, then return to that OB, then you take your trade. That's it. That's how simple it can be. Okay, so that's what happened there last night. Okay, so you see that this is H4 OB. You see that H4 OB is correlating with H1 bearish break, H1 breaker, then H1 bearish order blocks. So this high confluence. So I expect price to trade back to that OB here. Then you see this failure swing here. You see that failure swing? Price was going up, created a lower high, then failed to create another higher high. That's a failure swing. Boom. So we expect price to come up here, then break to the downside. Okay. Does this get clearer? I hope this is very clear, and this is a pinpoint. It's very precise. Okay, this is very very precise, and this gives us. Okay, let me take us on a tour on USSD JPY. Okay, let's take this analysis from this particular price data from here. Okay, so we see that this is this is top down analysis from the monthly time frame, and this is actually a real time data. Okay, so this OB here, this is the monthly OB. You see how price is rejecting off that monthly OB. Why? This monthly OB rated liquidity, you see that? That's the first one, rated liquidity, and you see this is a structural high. This is monthly time frame, and this is actually a structural high. This is a swing high. So price broke that swing high. You see how it's coming back to the same OB, and you see the reaction. Look at the first reaction. Okay, let's say we are considering just the body. I told you the week is also important. Okay, but to get, you see, price reacted off. This is some cool peeps, man. Look at the next reaction here, and this is actually a accumulation schematic. Okay, this is accumulation schematic around this OB, so we expect a massive move to the upside. Okay, so that's the monthly time frame. I'm expecting higher prices based off that. Okay, now that OB here that we saw on the monthly time frame, you will see that there was price action around that OB. Look at this area now. Price stop hunt, went up, boom, came back to that OB that actually broke because there was a gap here. There might have actually been a swing high here. So price came back to that OB that rated liquidity, then boom, broke structure to the upside. Like I told you, broke structure, boom. Then you see, so we anticipate price coming down back. Okay, you see, when price broke structure here, price actually came down to that OB here. You see that price weak it down, then went up. So look at this OB here. We can actually take some trades off this particular OB here. Okay, that's the last down close candle there. So we can still take some trades, okay. We can still expect reasonable price reaction of this area in the future. You see this OB here, and you see, look at what happened. Price stop on, boom, went to the upside. Upon price coming here, there was still some level of reaction. This is the weekly time frame, and you will have caught some awesome trade, you know. Okay, so price reacted to that OB, particularly there. Okay, so this is just you understanding these things from higher time frame perspective. Okay, so you can anticipate a reasonable price movement from this area in the future. Okay, let me zoom out to the recent data where I actually expect price to do. Okay, okay, like I said, you can use OB to determine directional bias, so you do not expect a break below uh previous OBs. Okay, this is the H4 time frame. So you see price coming down, coming into that H4 OB there. Okay, see that H4 OB is actually inside. You see, you see the H1 OB inside that H4 OB. Can you see that this H1 OB now rated liquidity broke structure? So this OB, boom, you see that. Okay, so then look at this OB here, rated liquidity price coming down to the H4 OB. You see, this is actually a good price action in this zone here. I love this price action I'm seeing. Okay, okay, uh, so like I was saying, price rated liquidity here, broke structure to the upside, then came back into that OB, and look at how the massive reaction to the upside. Okay, look at the same scenario again here, inside that same OB that price rejected off there. So price rated liquidity, this OB rated liquidity broke structure. So I expect, this is real time live data, so let's see what price does. So what do I expect now? I expect price to reject off this particular zone. Okay, if I don't want to take this risky entry, this is 30-minute time frame, I will just switch to the 1 minute or the 5 minute now, and wait for same price action in that area. You see that? So I want to see price action. You see how price is rejecting off that zone massive, you know. Let me see how many pips stop loss that would have been if I just want to go aggressive uh, from that area like that. Wow, that's a reasonable 4 pip stop loss, you know. That's 4 pip stop loss, and I'll be targeting this is the first take profit, 18 pips. Then I'll leave some to run for like, I expect a rate above all these highs. You see, that's just a 4 pip stop loss trade, you know. So I expect, of course, this price action is inside this 1 hour OB here, you know. This 1 hour OB give a precise, you know, price action stop wanted, broke structure to the upside, then price came back to that 1 hour OB. Did you see the confluence of everything coming together? Then in that 1 hour OB still, price raided these stops, broke the last structural high, boom. You see that massive rejection? This is not insight. I actually showed you live. This is live, you know. This is live. Okay, so I expect a rejection to the upside from this particular zone, for price to rally to the upside from that zone. Why? Because I expect higher prices from higher time frame. I expect higher prices in USSD JPY. Okay. Okay, guys. So I think I'll end this video to stop unnecessary prolong in the video. So see you in the next video. Okay, so go to your chart, mark out obits and breakers, and I want you to note how price react to all those price specific price levels. Okay.